In 2014, people didn't lose their money in a robbery. They didn't lose it to a war. They didn't even lose it in a market crash. They lost it to math, trust, and a system that nobody fully understood. This is the story of Mt. Gox, the day Bitcoin almost died, and why this story matters more now than it did back then. Imagine it. It's 2013. Bitcoin is still weird, still fringe, still something your smart friend won't shut up about. But if you wanted to buy Bitcoin back then, there was one place everyone went: Mt. Gox. At its peak, Mt. Gox handled over 70% of all Bitcoin transactions on Earth. One website, one company, holding the keys to most of a brand new global money system. No government license, no real audits, no safety net, just trust. And a password. People didn't just trade on Mt. Gox, they parked their savings there. Life savings, college funds, early retirement dreams, because Mt. Gox felt inevitable. If everyone is there, it must be safe. If it's still running, it must be solvent. If withdrawals work today, they'll work tomorrow. That logic has destroyed fortunes for centuries, but in crypto, it happened faster, much faster. Here's the uncomfortable truth most people didn't realize. Mt. Gox wasn't a bank, but it acted like one, and users treated it like one. When you deposited Bitcoin on Mt. Gox, you didn't own that Bitcoin anymore. Mt. Gox did. You had an IOU on a screen, a number in a database, and as long as withdrawals worked, nobody questioned it, until they stopped working. By early 2014, users noticed something strange. Withdrawals were delayed, support tickets went unanswered, excuses became technical, network issues, transaction malleability, maintenance, big words, vague reasons. Then one day, trading halted, withdrawals frozen, the website went dark. And behind the scenes, the math was exposed. Mt. Gox was missing 850,000 Bitcoin. Gone. Not locked, not misplaced, gone. At today's prices, that's tens of billions of dollars. Back then, it was still catastrophic. This wasn't a movie-style hack, no dramatic breach, no alarms. It was worse, a slow leak. For years, because Mt. Gox's internal systems were a mess. Private keys stored poorly, security patched together, accounting done manually, sometimes in spreadsheets. This company controlled most of the world's Bitcoin, run like a side project. And the irony, Mt. Gox didn't even start as a crypto exchange. It started as a Magic the Gathering trading card website. That's what Mt. Gox stands for, Magic the Gathering Online Exchange. A card trading site became the backbone of global digital money system. No one stopped it, no one questioned it. But here's the real misunderstanding. Bitcoin didn't fail. The blockchain worked exactly as designed. No fake coins, no double spending. The failure happened around Bitcoin, in custody, in trust, in centralization pretending to be decentralization. People thought they were in a trustless system. They weren't. They handed trust to a company, and that company became the single point of failure. When Mt. Gox collapsed, Bitcoin didn't just lose value, it lost credibility. Headlines screamed, "Bitcoin is dead." Handbags laughed, banks smiled, critics celebrated. Bitcoin crashed over 80%. Developers panicked, investors vanished, the ecosystem froze. For a moment, it looked finished. But Bitcoin didn't disappear, it learned. Cold storage became standard, security improved.
Not your keys, not your coins became law. Mt. Gox became a scar, a warning burned into crypto culture. But scars fade, and that's where danger returns. Today, everything looks cleaner. Better apps, smoother UI, one tap investing, one tap to buy, one tap to earn yield, one tap to trust someone else with your money. Different names, same structure, centralized custody, hidden risks, confidence replacing verification. Every cycle, people say, this time is different. Mt. Gox users said that too, right until the screen went dark. Here's the quiet lesson. Decentralized money held centrally is just traditional finance without protection. No insurance, no bailout, no help desk, just silence. Even today, Mt. Gox victims are still waiting. Courts move slowly, assets remain locked, time destroys value. Some will get something back. Most won't recover what they lost. They paid the tuition fee for everyone else. So here's the unresolved question. If a system built to remove trust keeps recreating trusted middlemen, is the technology broken, or are we? Because Mt. Gox wasn't the end of Bitcoin. It was a warning. And warnings only work if we remember them. The screen fades, and somewhere, money is still sitting behind a login, waiting to see if history repeats.